गुड मॉर्निंग स्टूडेंट्स। कैसे हैं आप लोग? आज हम लोग मनी एंड बैंकिंग पढ़ेंगे। बेसिक्स ऑफ मनी क्या होता है? मनी की चूंकि चैप्टर आप लोगों का थर्ड में है, यूनिट 2 में है। मनी और बैंकिंग पार्ट है, तो इसका थोड़ा सा एक पार्ट पढ़ेंगे कि मनी क्या होता है, व्हाट इज मनी, ओल्ड मनी, न्यू मनी, एंड द फंक्शन ऑफ मनी वी विल स्टडी। Students, you can see here that definition of money. What is money? Money is the thing which is used as media of exchange. Students, you can see as a media of exchange. And if we go for the ancient time, there is a old form of money, and this money is called the old form of money is called, that is the goods, that is the gold, silver. These are called old form of money. And nowadays the money has been changed its form. Nowadays it is used as a currency, coins, check, and we are also using many cards for exchanging money in the virtual form, digital form. So modern form of money is different from old form of money. Old form of money, the goods, that is the silver coins. Modern form of money, that is checks, that is the currency notes and coins. They are usually used for media of exchange. Now, function of money. Students, you know that there are four functions of money. Money has a function four: medium, measure, standard, and store. Media of exchange, first function; measure of value, second function; standard of deferred payment, third function; and fourth function is store of value. These four functions comes in the examination. You can study details in next slides. Next question, next point is that money supply. Students, it is very important to know about money supply. Money supply refers to components of money supply, that is the M1, M2, M3, M4. How much money is in the economy available, that is called money supply. And you can see that there are four components: M1, M2, M3, M4. These are the part of money supply. Students, you can see that there are three part of M1. One is C, DD, OD. C means cash with public, DD means demand deposit with public, OD means other deposit with public. So you can study about the cash with public, DD means demand deposit with public, OD means other deposit with public. So these are the components of money supply. Now the second point is M2. M2 is including having in M1 included, and you can see that these added deposit with bank. This term deposit, M1 is added with term deposit with bank, then it will be called M2 part. That is the second component. And M3 is M1 plus fixed deposit with the post office. So M3. And M4, this is the last one component, that is the other deposit with the post offices and in excluding NSC. But it does not include NSC, National Savings Certificate. This is the M. This is the M4. Now, students, you can see in the next part, broad money. What is broad money? What is narrow money? Broad money, that is it is denoted as M3 also. Broad money is the measure of an economy money supply, including cash, assets that can be easily converted into cash. It's a comprehensive indicator that includes currency outside the bank, demand deposits excluding those of the central government, time savings and currency deposits, bank and travelers checks, and securities like certificates of deposits and commercial payment. So you can see that there is a one point M1, sorry, M3, and this is indicating the broad money category. So M3 means M1 plus M1 plus deposit with bank, FD with bank. You know that FD with post office, post office. So you can see in the back side also. I have shared the same thing in the previous slides. M3 means M1 plus FD with post office. Okay, students. Now come to the next slide. Narrow money. This is the most liquid portion of the country's money. It's called mm, narrow money. Most liquid portion of country's money supply that can be used for transactions. These are called narrow money. Narrow money is a very narrowest money is called M1. Some people, some books have been given M2 also, M1 plus M2. But the narrowest money is M1 and broad money is M3. You know earlier that broad money is M3. Now fiat money. The money which is legalized by the government, a government issued currency that is not backed by the commodity, such as gold, is called fiat money. Fiat money gives central banks greater control over the economy because they can control how much money is printed. So most modern currencies such as US dollar, Indian rupees are called fiat money. Now next point is that money deposits in bank. Commercial banks. Commercial banks, you know that what is commercial bank? Those banks which are working for profits, receiving deposits and issuing credit, that they are called commercial banks. The most important function of commercial bank is credit creation. You can study here credit creation, money creation by commercial banks. You know that before money creation, RBI set down some guidelines. That is the money multiplier, that is the LRR, and etc. So LRR, if LRR is given, legal reserve ratio is given, then you can find out money multiplier 1 by LRR. In some books, there is a 1 by CRR has also been written. 1 by CRR has also been written. So CRR, LRR is equal to LRR equal to, you can see CRR plus SLR. SLR means statutory liquidity ratio. So these two are added to find out LRR. Students, money created. How money created? You know, money created by initial deposit into multiplier. Initial deposit, you can see initial deposit ID. You can see here ID. Money created means total deposit. You can say total deposit. Total deposit equal to ID initial deposit into money multiplier means 1 by LRR. This is called money multiplier. So money multiplier, you can also find out money multiplier also by these formulas. 1 ID into That is the money created or total deposit. And remaining formulas have been created from this. These also formulas. Money multiplier equal to money created over initial deposit, and initial deposit equal to money credited over money multiplier. These are the formulas. You can find out the answers, numerical answers. For example, you can see in the next slide. See here, this question. A bank with a required reserve ratio of 25% calculate money multiplier. How will you calculate money multiplier? The first you can see there is a written required reserve ratio. Students, you know that required reserve ratio means this is the LRR. LRR. LRR equal to 25%. So money multiplier equal to MM equal to 1 by LRR. Then you can find out 1 by 25, 1 by 25%. Now 25% is converted into 100 by 25. Then you will get 4. 4 is mm. So you can find out easily, very easy question solution is there. Now in question number 2, you can see initial deposit in banks is 1000 rupees and CRR is 10%. Find total deposit. This is you already know that TD means money credited. TD equal to initial deposit ID into MM. So first of all, you will calculate. Here you can see that there should be this is initial deposit should be there. Initial deposit I ID. So ID you will seeing 1000 and mm equal to 1 by LRR. So 1000 into 1 by 10%. So 1000 into 100 by 10%. Then you can see that 1000 into 10 equal to 10,000. This is the total money created. So students, you can see here this is the whole formula and you can solve this. And here one thing, this is wrong written. You can notify this initial deposit. Initial deposit. Okay. So money supply equal to money multiplier into initial deposit, and the solution can be done this way. Next is function of RBI. The whole money supply is controlled by two two ways. One is fiscal measure, and the other is one is fiscal measure. You can see here Fiscal measure. Fiscal means fiscal measure means it is created by the government, by government. And the other is monetary measures. It is done by RBI. So what is the function of RBI? To control credit also. So you can see here I have written in short form ACI Baba Business CC. CI you can see the full form. Currency issue, CI means currency issue, Baba means bankers bank, BG means banker to the government, CC means credit control, and OMO. OMO. So this is the function of RBI. Currency issue means RBI is printing currency as per the requirement. Bankers bank means there are two part of bankers bank: lender of last resort and final deposits. Issue just giving the loan to the banks. These are the bankers bank function. And banker to the government means it's also advises the government also governments and give loans to the state governments also. So it keep deposits with the bank government security. These are the bankers to the government function. And credit control means it controls the credit, means control the lending rate. So very important is this credit control. All the rates like RR, triple R, CRR, SLR, MR, all the rates are decided by RBI. Now, the last point is open market operation. Open market operation is one of the important part of Reserve Bank of India, in which sale and sale and purchase of security is done. So, students, you can see there open market operation. The last function has been given in the slide. Now, what is the effect of money supply on inflation? This is the last point. Why government try to control money supply? RBI try to control money supply? This is the many important questions for you. The important point is that money supply, if money supply increases in the economy, then inflation will occur. Suppose you will see that how inflation will occur. You will study in next slide also. But suppose people are having more and more money, they will go to the market, and what will be there in the market? The seller sees that many people are coming to purchase something. In such a case, seller try to increase the price. That's why inflation increasing. मैंने money महंगाई जो बढ़ती है इसमें. If the difference between the money supply growth and the growth of economy becomes too wide, suppose growth is not going to be so increasing, but money supply increasing. In such a case, hyperinflation occurs. You can see in the neighboring countries of India, there is a hyperinflation. So hyperinflation occurs. This is the uh, this showing that economy is going to be destroyed. means very much people will uh, unable to purchase anything because of inflation. So this is the two uh, effect of money supply. If money supply increasing, suppose money supply decreasing, what will happen? Money supply decreasing means inflation decreasing. There is deflation. Deflation. Deflation means you can see depression also. Depression. You can see recession also. Recession. Why recession happened? Because people are not able to purchase anything. People have no money. So this is the opposite part of the money supply. Money supply decreases, then deflation increases. Money supply increases, then inflation increases. So you can write in 4 points. Now the next point is why increase money supply cause inflation? Why? This is a very important lines. You can take a screenshot also of these lines. Money supply is the amount of money in circulation. This includes notes, coins, bank deposit, etc. If the government printed more money, then then there would be increase in cash in the economy. Means cash coins will increase the money. So where it goes to the household. Households would have more money, and so their demand of goods and services would rise. And this way, the demands of goods and services will increase. With more cash, we wish to buy more goods. However, if the amount of goods for sale remains same, suppose goods are not supplied, only money supplied. So goods for sale is same. Then firms or shopkeepers would see the big rise in demand for the limited supply. So they will respond to the higher demand by increasing price. So they will increase their price of goods. The price increases. Therefore, increasing money supply faster than growth in real output will cause inflation. You can see here. The reason is that there is more money chasing the same number of goods. Therefore, the increase in monetary demand causes firms to put up prices. This is the real reason of cause of inflation. Students, you know better. I think you understood properly, and this video will help you a lot in the examination. Thank you.